What is up, you guys? Pete DiCarlo here, and in this video, we're going to do something a little bit different. Normally, what I do is go over different stocks and different companies that I'm looking at to either trade or invest in. I like to do deep dives on those companies as well. I like to go over different trading strategies that I'm looking to teach you guys. But in this video, what I want to do is actually kind of do a reaction / elaboration on a quick little 4-minute clip from one of my mentors, Chamath Palihapitiya. And this is great because not only does this have to do with your own life and everything in it, but also trading and investing and being an entrepreneur in general. This is one of the best 4-minute clips I've seen in a very long time and one of my favorite clips from him. So that's why I want to share it with you guys. If you like the way that this video goes and you want to see more videos like this, make sure to comment down below and let me know, because therefore I can go ahead and cater to what you guys want to see. So what I'm going to do is play the video, we're going to listen, and I'm going to kind of pause between and elaborate and give my idea of what I think Chamath is talking about. So let's get started.
Some of the venture world at SoftBank, some of the tech world, and you said something about amassing capital. Today, what do you think is one of the best ways for us to amass capital on a risk-adjusted basis?
The last part is just such a sellout part. Or risk-adjusted base. I don't know, fucking buy some bonds? I don't know.
So obviously Chamath is joking here, but he says buy some bonds because the truth is there is nothing in this life, whether it's an investment or a trade or anything that you do, where you're not going to have risk. And so the word risk-adjusted basis, really, in my idea, is just kind of bullcrap, because you need to bring on risk. That's what investors and that's what entrepreneurs do. They are able to weigh the risk of an investment or weigh the risk of something that they're going to do, and they are able to take the risk with respect to what the risk is going to be in order to make their dreams become a reality. So he says bonds, which I think obviously is the worst investment you could ever have, but we'll see what he says after this.
Here's what I would tell you, man. I think if you ask me who's building the most important indelible company in the world, I've been very public about this, I think it's Jeff Bezos. Part of what he realized was the value of slow compounding. So here's my little theory about company value creation. The faster you build it, that is the half-life. It will get destroyed in the same amount of time.
And I agree with this, not only from company value creation, but just from building anything. The faster that you build something, in 99% of cases, the faster that it is going to end up crashing. And you see this a lot with people who are just getting into the stock market, whether it's trading, whether it's investing, but the people who get lucky, they buy into the Plug Powers and the Teslas. And not saying that's bad, that's amazing, but they don't know why. They're just doing it because other people are doing it. And they see success early on very quickly. They amass a good amount of returns or a good amount of capital, but the problem is they don't really know what they're doing, and then they end up losing it. The faster you make money, usually the least you respect it, and you have a higher chance of losing that money. I tell all the time how I grew my portfolio from like $5,000 slowly up, putting some money in, but up to $50,000, $60,000 at one point within my first 3 years or 2 years of trading. I'm sorry. And I ended up losing nearly all of it. I went from like 60 grand down to lows of like $20,000 because I was making money, but I wasn't making money doing the correct things. I was making money doing what I thought was right, but I really didn't. And so usually the faster you build up a portfolio, the faster you build a business, the higher chances, I think, of failing. And number two, like he said, the half-life is another one of those things where, it's not going to last as long. So let's see what else he says about this.
So when you think about a lot of like social businesses, that's played out. And when you see sort of like the top, so like, does it take 8, 9, 10 years to build a really great consumer business? It'll take 8, 9, 10, 12 years to destroy it. And we may see the tipping point on a couple of these businesses. Right now, we may be seeing it in front of our eyes, regulatory or otherwise. So why is that an important statement? Amassing capital, to me, is about finding a smart, useful solution to a very hard, practical problem and being slow and methodical. And again, this is what I'm saying. You have to rewire your brain for that to be okay. How do you, in year 2 or year 5, come back to this room for your, what is it called when you get reunion? And say, I'm still working on the same thing. And when somebody says, and how's it going? You have the courage to say, it's hard.
And I agree with this entirely. I talk a lot with my mentorship group about the steps it took to become an entrepreneur, to build the business that I have. And it looks like I've built everything that I've had within the past year, right? I have a private stock market academy, we're doing well over 6 figures this year. And I started it 9 months ago. And, we started with 10 people and now we're up to 360. And just from the outside, it looks like, oh, he built this business so quickly. But it's like, no, I've been rebuilding my entire life since 2014. So that's 6 years of, changing my social habits, changing my eating habits, focusing more on my health, learning, reading books 4, 5, 6 hours a day, going to different seminars, learning from different mentors. Like all these things have led me to where I am right now. And it's taken a long time to even get to this, which I think I'm scratching the surface of right now. And so when people ask you, like, how are you doing, to have the courage and say, it's hard. Like I've said that all the time. People are like, how's your business? How's being an entrepreneur? And before this, I'm like, dude, I don't even have food in my refrigerator. And now, yes, while I'm making good money, I still have to say, like, it's hard. I'm working 12, 13, 14 hours a day. Like it's tough. And building, the point of building everything slow, and like he said, rewiring your brain to a delayed gratificational mindset is one of the most important things. And he'll go on more about this, but that's the biggest takeaway I can get you from this is change your brain patterns, change your way of thinking, your psychology to a more long-term approach. And we'll get back to the video and we'll talk a little bit more.
I haven't figured it out yet. I don't know. But if you figure it out and you have this moderate growth, moderate compounding, that is the key. That's gold. I look at like our returns and it's so funny because it's like you can get so enthralled by IRRs in our business. And like, I have friends who run other organizations and they're like, we posted 92% IRR. And I'm like, well, you can't eat IRR. What does it really mean? And when you unpack it, what you realize is like fast money returns can completely really decay long-term thinking and sound judgment.
Agree. That's what we talked about earlier.
I would really love to just compound at 15% a year.
So if you look, going back at what he's saying, like when I turned 5,000 into 50, the short-term gains actually decayed and eroded my long-term gains, because I'd probably be in a much better place right now if I hadn't thought that I made all that success and then had to rewire and spend 3 years building all that money, then losing all that money, and then rebuilding all of my skills. So I completely agree.
And the reason is because if I can do that for 50 years, that's $250 fucking billion, like some crazy number. Like it's just enormous. So it's like slow and steady against hard problems. Start by turning off your social apps and giving your brain a break.
So to give you an understanding before he continues to talk here, Chamath was one of the first employees at Facebook, and he's been one of the main people to speak out against Facebook and regulations against Facebook. And so he'll talk a little bit further now, just to give you some backstory.
You will at least be a little bit more motivated to not be motivated by what everybody else fucking thinks about you. Do you know what I'm saying? It's hard. Think about how all this stuff plays together. How does trying to get, posting your fucking waffles online relate to me starting a business and accumulating capital? This is wiring your brain for super fast feedback. It's the same brain you're using to build a company. Don't think they're not the same. Do you know what I'm saying? No? Yes? No? Yes. Yes, right? You have one brain. So you're training your brain here, whether you think it or not, whether you know it or not, whether you acknowledge it or not. Acknowledge that these things where you're spending hours a day are rewiring your psychology and physiology in a way that now you have to use to go and figure out how to be productive in the commercial world. So if you don't change this, you are going to get the same behaviors over here. Change this. There's a reason why Steve Jobs was like anti-social media. I am telling you, I'm not on these fucking apps. I'm not him by any stretch of the imagination.
And you can imagine if one of the main players in Facebook, one of the first employees, and not just like the first employee like a janitor, one of the pivotal people who took Facebook to what it is today, if him and his family and his friends are not on social media, it says a lot.
Proactively trying to rewire my brain chemistry to not be short-term focused. I'm telling you they're linked.
And so essentially that is the video, but let's just take a look real quick, right? I always talk about this, compound interest calculator, and you guys got to spend some time on these. The long term, I like to use the Money Chimp ones. I just always look up Money Chimp, And guys, these are one of the most important things because, like Chamath said, right? Let's just imagine that you start with $25,000, and let's say that every year you were to add $5,200, which is $100 a week. That's basically maxing out a Roth IRA, and we gave it 30 years to grow, and you got an interest rate of what Chamath said is 15%, which is huge. That's $4 million that you would have in 30 years. Well, let's say that you're a trader. And for me, I always tell my traders that you should be shooting for about 2% to 3% returns in a week on average. And I'm not like every single week you have to hit 2%. Maybe one week you hit 5%. Maybe one week you hit 1%. Maybe one week you lose 5%. But if you average 2% returns a year, 2% a week, that's going to be like 104% returns, which in 30 years, you're going to have $68 billion. And of course, people can't look that far. So let's just say 10 years. If you can make 2% a week in the markets, you'll have $43 million in 10 years. Let's just say that you're going to start with your stimulus check, $600. But every year you only can put $100 a month in, so $1,200 a year. In 10 years, if you could get those returns, $600 and $100 a month, quit smoking cigarettes, right? Quit some of the subscriptions you pay for on your phone and your internet. Quit some of these things. Learn how to trade, even learn how to invest. If you could pull 104% returns a year, just 2% a week, you could have $3.5 million in 10 years. I'm 32. At 42, I would have $3.5 million. Let's just say I can only pull 1% return a week. I'd still have $266,000. And so it's more important, and I tell my traders this too, that when you're looking at your profit and losses, that it's like this. It's a slow move up instead of like this, up, down, up, down. So guys, I hope that video helps. If you like more videos like this, breaking down a lot of things that I listen to a ton of videos, I read a lot of content, and having mentors online is one of the most important things you can do as an entrepreneur. Hit the like button, subscribe to this channel. Let me know you guys enjoyed the video, and I'll see you guys next time. Peace.